Yo, what up? The Cosmic here. I wanted to go over the latest Twitter poll winner, and today that was how to trade off of MACD and RSI. The other votes were how to trade off VWAP, a parody video of bears, or a parody video of the bulls. And today, y'all decided to actually learn something versus a parody. So, um, first, we're going to go over MACD. What is MACD? MACD. It is the moving average convergence divergence. It's a trend following momentum indicator, and it shows the relationships between two moving averages of a security's price. And it's typically calculated by subtracting the 26 period exponential moving average, or the EMA, or the 12 period, and from the 12 period EMA. The result of this calculation is the MACD line. 9-day EMA of the MACD is called the signal line, and that is plotted at the top of the MACD line, and which can function as a trigger for buy or sell signals. And so with that, let's open up the study and see what it is. So if you're using eTrade Pro, you go up here to studies on your chart, and it's sitting right here. If you don't have it populated right here in your top studies, which you should, you come down here and you just go to your IMS and you can find it right there. So let's look at it. What is it? What is this showing me? Well, these are showing me the momentum changes when a stock is actually uptrending or downtrending. So the white line is considered your fast EMA. That, I believe, this one is your 26 EMA, and this one is your 12 EMA. And this right here is your average of the line. So whenever your white line right here goes below your red, that is a signal of a downtrend. And using Amazon, you see that downtrend happen right here. And then whenever the white line comes back up over your red line, you start to get your uptrend. And once it's over this line right here, showing good positivity, then it's essentially a good hold. And the best time to go ahead and try to sell would be whenever the momentum starts to change. So if you're using your MACD and you bought right here whenever the momentum was starting to change, whenever your white line was meeting your red, and you sold right here whenever your white line dipped below your red, you got a good little profit right here. You caught that. Well, this tool is powerful in itself to show these momentum changes, but what I like to use, and the reason why the video is for MACD and RSI, is using them both in conjunction is a great way to learn how to swing trade. So with that being said, what is RSI? RSI is the relative strength index. It's a technical momentum indicator, and this analysis measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock. The RSI is displayed as an oscillator on a line graph and can have a reading from 0 to 100. The indicator was developed by J. Wells Wilder Jr. and introduced in his book 1978 book, New Concepts in Technical Trading Systems. So what is RSI? How do we find it? Let's look at it. And right here I have my RSI. Whenever you populate RSI in eTrade, it'll automatically set at your overbought at 80 and your oversold at 90. Well, let's edit that. We'll go here and we'll want to change your overbought zone to 70, because 70 is typically is the typical range that a stock becomes overbought, and 30 is whenever the stock starts to become oversold. And what I like to do is I like to do little fancy colors. I like to whenever a stock is overbought, that's indicator to sell. So I will go here and I will do red. And whenever it's oversold, that's an indicator to buy. And so I come here and I do green. Now hit you're done and you'll see right here. And let's look at Amazon again and compare the MACD and the RSI, what they're telling us, and why I would use both of these in conjunction with each other to base my trades. So right here, whenever this momentum changes for the downside, you see it comes and it touches this oversold. Well, even if it touches it, I want to know that that is a good entry because it's being oversold. So this shows that it's being oversold right here. But my MACD doesn't show any momentum change until right here. Well, once it bounces off it being oversold, and I start seeing this white line creep back up to the red line, that is an indicator to go ahead and try to get in. So if you try to trade just based off of MACD and said your entry was here whenever your white line crossed your red, you would be, and then your sell would be right here whenever it goes back below your red. You would only have caught in this part of the move, right from here to here. Not that big of a part. Well, if you use your RSI and you come down here and you see that it's being oversold, typically stocks that are oversold bounce back up. Stocks that are overbought bounce or spike down. So whenever it touched and you saw this momentum just going down, your RSI says right here that it is starting to be oversold. And then the next tick is it's starting to come back into its normal range of trading. This would be an ideal entry because you got that tick and then you start to see your white line on your MACD come up and approach your red line. So let's look at when you would sell off of your RSI. Well, buy whenever it's oversold, and then sell when it's overbought. So if you sold based off just the MACD alone, and saying that you're only going to sell whenever the momentum switches, like I said earlier, you would be selling right here. But the RSI doesn't indicate that it's overbought or oversold at all. Well, if we keep following it, you see that it kind of faked you out a little bit. It came back down, and the momentum still kind of continued. It held above this main line here, and I believe you can go here and you can edit the line that you want. You have your signals, your increasing bar, and all that fun stuff. And, let's just do pink, something to, I don't like that. So let's just keep it like that. So MACD is going to be your white line, and your signal is your red line. And then, like I said earlier, it's taking your fast period, your 12, your slow period, your 26, and your signal period. And your signal is that red line. You see that switches. So let's just leave that red. Let's leave these all alone. And you can mess with your MCAT as much as you want to find your best style of trading. But from what I've noticed, you don't need to mess with these numbers. On your MACD or your RSI, you really don't need to mess with the numbers. So if you buy in here at this position, or say you buy in here again, and you sell right here, you're not taking the whole move. You got scared out because your MACD was dipping below your signal. Well, using both of these, you would see that the best time to sell would have been probably this. If you used your RSI only, you would be like, okay, this is the best time to sell. But let's look at your MACD. It's showing strength still. It's still above its median line, and it's still showing strength and momentum upwards. So you want to use them in conjunction with each other. So you go through 2 more periods of being overbought, and then right here, after it stops being overbought, you start to see your momentum switch. You start to see your momentum switch. You see the momentum actually dip down, and then that would have been the time to sell. It just become overbought. Your MACD is starting to dip below your signal. Those are the conditions that meet a sell. And then coming right back down here, you're in a downtrend. RSI is saying you're oversold. Well, this downtrend shows nothing. Like, you don't know what's going to happen here. This would not be a good buy indicator. Right here, on the other hand, would help me give an ideal buy indication. Just because you're no longer oversold or overbought, your momentum is swinging to the upside, and you can go ahead and take your position and sell your RSI here. If you were to basically trade off the RSI on this play, it would have been almost a perfect play. Buy once it hits your oversold, sell once it hits its overbought. So that's how come you have to use both of them in conjunction. You want to see where the momentum is going and if the stock is oversold or overbought. Let's look at one more stock for an example. Let's look at Mark. Oh, Marky. So this is Mark's 1-year chart. Let's go a little bit closer. Let's do the 3-month chart. The 3-month chart has most of its movement. Well, let's see. With this start of its run-up, it's showing your MACD is nothing but up. And it's just continuously trending up. But you're having overbought. Just consistent overbuying. But your MACD is showing no signs of slowing. Whenever your RSI starts to dip back down into its region of normal trading, you see that's whenever it started to crack. The spike ended. But your momentum indicator didn't show any of that. Let's move into the 1-month chart. The same chart, just a little bit closer. Your momentum indicator is still saying that it's up, but you're no longer getting that overbought. And you can see that it's not reaching it. It's not reaching its point of wanting to break out. So with that being said, the ideal entry again would have been whenever your RSI is in its range and you're starting to see this uptrend. Let's look at the 3-day. Now you see a whole lot more volatility on its 3-day. So you'll have the momentum, the charts changed based off the time frame you have the stock. So that's my 5-minute chart. That's my 30-minute chart for the past 3 days. And then that's my 1-minute chart. Very, very choppy. So you want to make sure that you use the best indicator for your ideal trading style. I like to use the 5-minute chart. And now with Mark, let's look at it. Let's look at the 3-day. What's been happening? So it touched oversold right here. And it barely almost got to being overbought right here, but not quite. Whenever it hit that oversold, you see that your MCAD is starting to sink, starting to be lower. I apologize about that. Your MACD. So continuing on, we get to the next day. It hit its overbought zone. and then it just downtrended. And then down here, it barely touched its oversold. And you still don't see any momentum switch until right here. That's when you start to see a momentum switch. And that's how come you need to use both. You can't just base it off of one. You've got to base it off of both. And if it's not in this if it's not being overbought or oversold, and it's starting to show an upwards momentum, that is something that I would consider getting in. And you see here, it consolidated, and then this right here was just PR. A big PR came out and it spiked the stock, quickly making it overbought. Well, let's go to the next day, where there is no real, next couple days, where there is no real, let's pull that down. Next couple days where there's no huge PR. Well, right here, it touches, it's oversold. And then what happens? You start to see your momentum swing change. It hit its peak, it hit its bottom on your MACD, and it's starting to come back up right here after touching its oversold. So you see that it's just a pattern that repeats over and over and over. And so what I've been doing is buying when it's oversold and selling when it's overbought. Let's do one last example. XBA. XBA is a good example because it's been extremely volatile in the past few days. So look at this. This is whenever they dropped an offering, and they dropped an offering at market price. I explained it in my XBA offering video. It was, people were freaking out because they didn't understand how to read the SEC filing and what does an offering at market price mean. So it just quickly tanked, and almost, I mean, at the beginning of the day, it already was being, the MACD had a downtrend. And then you get into this huge overbought zone. Now or oversold zone. Now whenever you're in this a huge oversold zone, that's an entry, because it will just come back up. So if you got in on this overbought zone, oversold zone, whenever your MACD is starting to show an uptrend, say that is about 460, and then you held and waited until your MACD was showing strength and your RSI was overbought, you would have gotten in or sold into strength right here at 506. So it's not a huge gain, or 450 to 506. That's a 10% gain, and that's a 1 day swing. So as long as you can make sure you hold your position, if you got in here, or say even right here, to show that your MACD was showing proof of being able to trend reverse, you would be kind of scared whenever it drops down here. But you only have an overbought right here in the pre-market. So that would be one good signal to sell. And it never hit its oversold. So just continuously waiting. If these lines are closely together, then that means it's more likely not having a super huge trend reversal yet. And the further away these lines are on your MACD, the more strength that the stock has. As you can see right here, your white line just started to pull away from your red, and then you had that huge spike. Right here, your white line pulled all the way around from your red, and you had a huge dip. So that's essentially how to trade off of MACD and RSI, and how I use it whenever I swing trade or even day trade. Let me know what y'all think. Leave a like, subscribe, share it to your friends, and leave a comment if I missed anything or if I am a little confusing in my explanation, and I'll gladly clarify it. Thank you so much, fam. Y'all have a good one. Peace.